It's Larry FX Academy, and today we are going to be talking about the step index market. Now we are at a prime zone where we are going to be holding what we call swing trades. We are going to be holding those trades for a really long time, for days, and then seeing the amount of profit we are going to be able to rack in from the particular move. Now, this particular pair from my videos needs no more introduction because we've been playing around this particular zone. So the simple thing we are going straight to is the current market which we are analyzing in order to take our entry. Now, what do we have? We have what we call our liquidity swipe here, which is very important in terms of making our entries for trades. And then we have our break of structure here, which is also very important. This is also a break of structure, but from a different reaction. This was actually a take profit related from this particular break of structure to the downside. That's fine. So now, based on this particular reaction, we can now go to the 4 hours time frame. Now, on the 4 hours time frame, things begin to look interesting. We had this level being taken out, and this is basically our liquidity. We had this level being taken out, market swiped it to the upside. Now, one thing we can clearly see is we have a trend line from this particular area to the upside, which I will show you clearly. So we have our trend line. This is something we love to see in the market at times. And then we have our liquidity grab. So that being the case, we simply work with this low and this level as our new high. And then you can clearly see at this point where market pushed into our first entry, it stopped us out because we actually looked for an entry here and then it stopped us out, didn't drop to the downside. Currently, we also have market pushed into this 0.618 level as our price, and then it's currently dropping to the downside. This is actually what we have been looking for. Now, what we did do to be able to maximize on our entry on this particular level? We simply, now originally this is our level for our stop loss between here and stop loss, our level for stop loss within this point, because this is the daily this is the 4 hours time frame. Whether within the 4 hours or the daily time frame, this particular move from this particular area to this area, it's a lot of pips. So what we'll simply do, we'll go to the smaller time frame. So on the smaller time frame, we are able to now get to understand the structure. Now on the smaller time frame, this is the main level we're looking out for break of structure, and this is another level we are looking out for our new liquidity. Now, this being the case, we can now go to the smaller time frame. This is what we are looking out for on the higher time frame. Now, mind you, market has tapped into our level and we've already entered our trade here, and we are trying to catch this whole move to this particular level. So this is what we are looking out for. Yeah, if we're able to hold, fine, but we're able to wait for this particular trade for a long time, so we should be able to hold it in profit for a long time. So I actually entered off from this particular area, which I'll be dropping the screenshot on the community, and then my stop loss actually was just at the tip of the move. So I got the entry on 1 minute time frame. So we are looking at targeting this particular area. So this is our target for the volatility the step index actually. So we can now go to the 15 minutes time frame. So on the 15 minutes time frame, what we can clearly see, we have to go to the 5 minutes time frame again so I can show you and explain something out for you guys. So on the 5 minutes time frame, things began to become more clearer, but before I explain what is currently happening in the market, I would like to explain what has happened in the market and why I entered. Now, this is something you are able to do only from a lot of knowledge getting basically. So at this point, I got a break of structure, which was this. So what I simply did, I just dragged my line across. So I understood this is a level of interest. Market pushed down, created a high, but didn't break above this particular level and pushed down again, pushed up and then pushed down. By close of this candlestick, we got in and we began to ride it. So ever since then, we've been riding the trade up till market gave all these moves. So enter the trade around here, market dropped massively, retraced, and I got in again this morning around this particular point to ride it down. So that is what we have for the volatility for the step index trade basically. So this is what we have for the step index trade. Now for the current move, this is what actually would have made us enter this particular current trade. The reaction goes to the higher time frame. This serves as our liquidity grab. And then this is our swing high, this is our swing low. Now, because we are looking at the higher time frame, the long just be taking our trade and holding it to this point. So now, ideally, what we're supposed to do is to take our entries from these particular levels, and stop loss would be at this high, which is at this point. Our stop loss is going to be here based on this particular re-entry, and our take profits here. But because we understand that we are looking at the long term, we can freely just put our stop loss at break even and allow the trade drop massively. So this is actually what we have for the step index market. Do have a wonderful week ahead. I love you all. Peace. One love.